Why the middle class is about to pay much more tax. Most people think taxes go up only when governments raise tax rates, but that's not what's happening in Britain today. In fact, the middle class is about to pay much more tax, even if tax rates never change. And the reason is something called fiscal drag. Tax receipts in the UK are reaching record levels. The tax burden is heading towards its highest level since the Second World War. That was 1945. Can you believe it? Yet the government hasn't dramatically increased income tax rates. I remember as far back as the late 70s when income tax, the top rate of income tax under Labour at the time, was 98%. Can you believe it? It was 83% top rate of income tax and 15% investment income surcharge. When the Conservatives came into government under Margaret Thatcher, income tax rates became capped at 40%. So how is the Treasury collecting so much more money? The key concept, as I mentioned just now, is fiscal drag. Let me explain this one to you. This happens when the tax thresholds stay frozen while wages rise. For example, the basic rate tax threshold, which is approximately 37,000, I believe, and you add your personal allowance to that, and above that level of approximately 50,000, you paid 40% tax rather than 20%. As salaries increase with inflation, more income moves into the higher tax bracket of 40% and even 45%. People end up paying more tax without any official tax rise. Let me give you a simple example. Someone earning £45,000 today might soon cross into the higher rate tax band. That means 40% tax instead of 20% on the element that's above that tax threshold into the higher rate tax band. Another issue is frozen tax allowances. The personal allowance has been frozen at £12,570 for a few years now. That's the level at which you start to pay income tax on income you earn above £12,570. The higher rate tax threshold is frozen at around £50,000. So above that, you're paying 40% tax rates for income tax. These freezes are expected to last until at least 2028. In the meantime, what's happening? Wages are rising. Inflation has increased salaries. So more and more people are crossing tax thresholds into the higher rate. And these people aren't earning what I consider very, very high salaries. Many people in fairly ordinary jobs are earning more than £50,000 a year, particularly if you work in somewhere like London, for example. Let's talk about the stealth tax effect. Because the tax rates stay the same, many people don't realise taxes are rising. Economists call this a stealth tax. So over time, millions more people will become higher rate taxpayers, and some unfortunate people will even pay tax at a rate of 45%. That's called the additional rate. A system originally designed to tax the wealthy increasingly affects the middle class. Let's talk about the middle class squeeze and why the middle class is particularly affected. That's because they typically earn above the basic rate tax threshold, around £50,000. They've got savings and investments, and they own property. This means they're exposed to not only income tax, but also capital gains tax and inheritance tax. Inheritance tax is also dragging more families in. This is another example of fiscal drag. You see, the inheritance tax threshold, known as the basic rate tax band, which every individual in the country gets, is at the level of £325,000. Now, this allowance has been frozen since 2009. That's 16 years, and it's going to be frozen for a few more years yet. The previous government has brought in an extra allowance on top of that called the residence nil rate band of £175,000. So it is better in that respect. And also it's allowed these allowances to be transferred between husband and wife on death. In the past, the allowance died with you, but the fact that your spouse can inherit it does mean there's a lot more tax exemption available. But being frozen since 2009 isn't good news for anybody because of inflation. So in the meanwhile, property prices have surged. Many ordinary homes now exceed these thresholds, especially in London. So as a result, more families are facing 40% inheritance tax. Next issue is capital gains tax changes. The capital gains tax allowance has been reduced dramatically in the last few years. Just a few short years ago, it was over £12,000. But recently, the annual capital gains tax exemption has been reduced to £3,000. That's a fall of more than 75%. What this means is investors are now paying tax on capital gains much sooner than before. And what people does is typically affect, or mostly affects, landlords, investors, and business owners. Why governments prefer this strategy? Stealth taxes are politically easier. Governments avoid headlines saying income tax raised. Instead, tax thresholds remain frozen, and inflation does the work for the government, because as those salaries rise and the incomes rise, more of it gets taxed at the higher rates. So tax revenue quietly rises. From a treasury perspective, it's extremely effective. So what this means for the future: if current policies continue, millions more people will move into the higher rate tax bracket. The middle class will carry a growing share of the tax burden, and tax planning will become more important than ever before. So let me just cover a few simple strategies to reduce tax legally. For example, if you've got spare capital, you can use your ISA allowance, which is up to £20,000 per person. Although there's talk that the government may reduce that limit for what are known as cash ISAs, which is bank or building society ISAs, where it's a deposit account, as opposed to stocks and shares ISAs, which will remain at £20,000. And as the name implies, you can invest in stocks and shares. But nonetheless, £40,000 a year per couple can accumulate to quite a lot of money, and there are already more than 10,000 ISA millionaires in the UK, believe it or not. They've done that for quite a few years. You can maximise your pension contributions. Unless you're a very high earner, you can pay in up to £60,000 a year, typically, per person into pensions. You can do more careful capital gains tax planning. Be careful not to realise too big a capital gain each year. One way of doing it is to put more money into pensions and ISAs, as I just mentioned. But when it comes to selling, you may have to sell more often to realise a capital gain, to create a capital gain, because the limit is so small. Instead of maybe occasionally, once every few years, selling shares, for example, you might need to do it more than once a year to make up this, or more annually to get the benefit of the lower capital gains tax exemption. You may want to consider trusts and estate planning. To do that, you really need to get very good professional advice, because it's quite a complex area. But the main thing is this: you need to plan ahead. Planning ahead can make a significant difference, and many taxes can be reduced. Sadly, if you're in a salaried position, there's often much less scope for tax planning. But if you run a business or you're self-employed or in a partnership, there's more opportunities out there for a bit of creative tax planning. So the key takeaway is this: taxes don't always rise through higher tax rates. Sometimes they rise through frozen tax thresholds and stealth taxes. And that's exactly what's happening in Britain today. The result is a gradual but significant shift. The middle class paying more and more tax. Let me leave you with a question at the end. Do you think the UK is becoming a high tax country? Let me know in the comments.